Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. Indian equities break a two-day losing streak with a brisk rally. The Nifty and the Sensex end at a one-month high as indices track gains across Asia. Rising expectations of a rate cut by the US Central Bank and easing domestic inflation offer support. The Sensex gains 575 points. The Nifty ends 175 points higher. Axis Bank reports strong numbers in Q2. Net interest income sees growth against expectations of a decline. Slippages also lower by 33% on a quarterly basis. President Donald Trump criticizes China for not buying soybeans from the US, calls it an economically hostile act and threatens to terminate cooking oil trade with Beijing. Analysts say Chinese cooking oil shipments to the US already dropped by 65% this year. 45,000 crores in investments, 26 car launches and 1 lakh crore rupee revenue goal. Hyundai unveils its 5-year India plan. The global CEO Jose Munoz tells CNBC-TV18 exclusively that India is the central pillar of Hyundai's global strategy. Tarun garg will take over as Hyundai India's first Indian MD and CEO from the 1st of January. Emirates NBD UAE second largest bank eyes a majority stake in RBL Bank. Sources say the deal and the subsequent open offer will give it a 60% stake. Add that the deal has informal approval from the RBI and is set to be announced very soon.
In special circumstances, up to twice in a year, you can withdraw up to 100% of your eligible balance.
The CEO of the Employee Provident Fund Organization defends the tweaks in the fund's withdrawal rules as the 12-month lock-in rule for 25% of PF balance would help ensure pension benefits in the long run. Adds that concerns over increasing withdrawal timelines is misleading. That's a CNBC-TV18 exclusive. The Supreme Court allows the sale of green crackers in Delhi and NCR ahead of Diwali, but with conditions. Allows the sale only via designated stores and authorized QR code. Says bursting of firecrackers will be permitted only between 8 p.m. to 10 p.m. from the 18th to the 21st of October. 20 people killed, 16 injured after a bus catches fire in Rajasthan. Officials say a short circuit in the bus air conditioning seems to have triggered a gas leak. All of that is coming up for you in just a bit, but on to the day's trading action. Indian equities have seen a sharp rally that brought a two-day losing streak to an end. Strong cues from Asia and increasing hopes of a rate cut by the US Federal Reserve helped the Sensex and the Nifty close at one-month highs. Easing inflation back home also helped bolster sentiment. The buying was broad-based with nearly 40 Nifty constituents ending in the green. The hopes of a Fed rate cut and the buzz of forward movement in trade talks between India and the US also made their presence felt in the currency market, where the rupee saw its strongest single-day gain in nearly 4 months, closing at a near one-month high, 88.75. That is where the rupee finally closed for the day. But the big earnings of the day, Axis Bank reporting a strong set of numbers in Q2. Net interest income have seen a growth against an expectation of a decline. Gaurav is here with the Axis Bank report card. Gaurav.
Well, as when we look at Axis Bank numbers, on the first look, the numbers are looking good. Provision is the only pinch of a salt, and I'll come to that. First, when we talk about net interest income, that increased almost by 2%. It was higher than our own expectations. PPOP, which is pre-provisional operating income, there we saw around 3% decline. It was in line with what the street was expecting. Now, when we look at provision number, that has come down almost by 10%, but it is still higher than what the street was expecting. And the reason being that there was an additional provision for an account, and this was worth 1,231 crores. And this is for 2 discontinued crop loans, as Axis Bank said in their press release. And that is the reason why when we look at profit, now that has declined almost by 26%, and it is also lower than what we were estimating. Apart from that, when we look at advances, the growth was very strong. They have delivered 11.7% growth in terms of advances, and in deposits, they have delivered a growth of around 11%. When we look at advances, street was expecting the growth to be in single digits. So definitely that is something that we will be watching out for. When we talk about net interest margins, now that has also declined just by 7 basis points. It is at 3.73% versus street's expectation of 3.63%. So definitely better than the street's expectation. Net credit cost, that has also come down from 1.38% to 0.73. So that's a decline of around 65 basis points. And gross slippages now, that is also at around 2.1%. So definitely there is some improvement. What we will be specifically watching out is that the provision, the additional provision that they have made for 1,200 crores in this quarter specifically. Second is that when we look at the gross slippages, the slippage number, because of technical impact, as they had provided earlier, is now at around 1,512 crores versus what it was at 2,709 crores. So we will be watching out on how their commentary is going to be and what they're specifically going to talk about the technical slippage going ahead. But all in all, apart from the profits that we have seen falling and lower than estimates, the numbers all in all look better than what we had estimated earlier for Axis Bank in this quarter.
Okay, better than what was expected. That's Axis Bank for you, Gaurav. Many thanks for joining us. The big global story, President Trump has said his administration is considering terminating its cooking oil trade with China after criticizing the country for purposefully not buying soybean from the US. President Trump, in a post on Truth Social, called Beijing's actions an economically hostile act. China remains the world's largest buyer of soybeans and has been buying it from Brazil and Argentina since 2024. As per reports, shipments of Chinese cooking oil to the US have also dropped by 65% in the past 1 year. Now, China has lodged a formal complaint with the World Trade Organization over India's electric vehicle and battery subsidies. The Chinese government has said it will take resolute measures to safeguard its domestic industry's rights. The Chinese Commerce Ministry said that India's measures are hurting China's interests and has urged the Indian government to correct wrongdoings. We are still waiting for a response from India. Middle East banking giant Emirates NBD is eyeing a 60% stake in RBL Bank after factoring in the mandatory open offer. Sources say the pricing of the transaction is likely to be calculated as per the SEBI formula. Ritu is here with more. So Ritu, deal likely to close soon, but almost 60%, that's what Emirates NBD could pick up in RBL Bank.
After Yes Bank SMBC, now we understand Dubai's Emirates NBD Bank is finalizing a landmark deal to acquire majority control of RBL Bank, which will mark one of the largest foreign forays into India's private banking space. And the deal could be announced very soon, in fact, in the next few days itself. Remember, the bank is going to report its earnings this Saturday. So we could hear about this as early as that itself. Now, there has been this has been widely reported that the two have been in talks and that Emirates was eyeing a minority stake in RBL, but our sources indicate NBD, the second largest lender in the UAE, is going to announce a deal to acquire as much as 60% stake in RBL Bank, which will include the open offer component that, of course, gets triggered when the acquirer buys more than 25% stake in a company. Now, we further understand NBD plans to acquire this controlling stake through a fresh equity issuance by RBL Bank, which will be done through its wholly owned subsidiary. Now, this is important because the entire investment is going to be then directly infused into the bank, and also because RBL Bank's current foreign shareholding, if you look at it, it stands at more than 22%. So the fresh equity issuance to NBD is going to expand the overall capital base of RBL Bank to ensure that their stake remains within the regulatory FDI cap of 74%. Now, our sources also indicate the transaction is expected to be priced, like you were saying, in line with, of course, SEBI's prescribed formula without a major premium to RBL's current market price. Now, the transaction cannot, of course, happen without RBI's blessing, and we understand this change of control has received an informal nod from the regulator. Formal submissions, of course, will be made once the boards approve this deal. Now, while RBI is not going to relax that 26% voting rights cap, our sources do suggest the regulator will offer a glide path to Emirates NBD, allowing it to gradually bring down its shareholding in RBL Bank. Now, for Emirates, of course, which operates in India through its 3 branches, the acquisition will significantly deepen its footprint in one of the top banking markets. And for RBL, of course, a globally recognized institution, massive capital infusion, and long-term ownership clarity.
All right, Ritu, many thanks for joining us. Volkswagen has resumed talks with the JSW Group for a joint venture to manufacture electric vehicles in India after discussions with M&M stalled. The Economic Times has reported that the company held several meetings with JSW in the past month to explore a partnership. The proposed JV could see the JSW Group handle local operations through JSW Auto, its mobility arm. Volkswagen, meanwhile, could provide the technology and product platform. Staying with auto, the sector registered broad-based growth in September as per industry body SIAM. This is strong manufacturing activity and robust exports have offset moderation in domestic demand for certain passenger vehicle segments. Passenger vehicle sales grew 4.4%, while sales of two-wheelers rose 6.7%. Speaking to CNBC-TV18 Times, President Shailesh Chandra attributed the rise in sales to GST rationalization and the ease of financing.
Consumer sentiment has definitely gone up, which is a good news for future growth, right? There's huge pent-up which is also building, which is not getting serviced fully in the festive period, so there will be carry forward of this. The reduction in GST rate will bring affordability across the sector, across all the categories of automotives, so that will play out as a structural change and will support the growth.
Well, that's the auto sales numbers. And more auto. Hyundai unveiling its 5-year plan as it aims to achieve 1 lakh crore rupee revenue goal and increase its market share in India. The automakers announced a 45,000 crore rupee investment plan in a bid to capture over 15% market share. It plans to launch 26 new cars, including 6 EVs by fiscal 2030. Hyundai Motor India has appointed Tarun Garg as its Managing Director and Chief Executive Officer. Garg will take charge from the 1st of January next year. He will become the first Indian to be the head of Hyundai in India. Global CEO Jose Munoz tells CNBC-TV18 exclusively that India is the central pillar of Hyundai's global strategy.
The main message that I've conveyed to all the stakeholders, including, of course, the shareholders in attendance, is that India is not important for the strategy of Hyundai, but it is the strategy of Hyundai itself.
For the last 29 years, you were consistently at number 2. The market share in the last few months has fallen, sometimes number 3, sometimes number 4. Does Hyundai want to be number 1 in India? Is that the plan?
And then one of the reasons why we may have lost some ground in terms of share is because we have decided, we made a conscious decision to focus on providing the best customer satisfaction and maintaining a high value, including the residual value of our vehicles to our consumers. Whilst others have entered into a price war, an incentive war, we've been very disciplined because one of our commitments to the shareholders is to maintain a very high double-digit profit margin in this market.
Why not a target higher than 15%?
Well, I think let me maybe summarize some of the things that we have announced, right? So we have announced that we're going to deliver in this market more than 860,000 total sales in the market. And then we have announced also an increase in capacity to 1.1 million, which would allow us to be, already we are, but to be by far the largest exporter of vehicles from India.
Well, you can watch that conversation exclusively on CNBC-TV18. The global CEO of Hyundai, Jose Munoz, talking to us about their plan for the market. Shares of Tech Mahindra slipping today despite its operating performance ahead of expectations in Q2. Both revenue and margins came in ahead of estimates, while constant currency revenue growth was at 10th quarter high. Tech Mahindra's management reiterates the company's guidance for the full fiscal. However, it tempered growth expectations for FY27, citing macroeconomic uncertainties. Coinbase has increased its investment in Indian crypto exchange CoinDCX for an undisclosed amount. This transaction will value CoinDCX at $2.45 billion. The funds will be directed towards the company's expansion in India and the UAE. Remember, Coinbase had first invested an undisclosed amount in CoinDCX in 2020. Now, the Employees Provident Fund Organization has recently revamped its partial withdrawal rules, consolidating 13 separate provisions into just 3 broad categories. The number of withdrawals allowed has also been increased. Sonal is standing by to explain to us what the EPFO has done by way of changes. Sonal.
Well, yes, important announcements and approvals coming in from the EPFO. This is with respect to withdrawal of your PF amount. So let's get started. The first one is that you can make partial withdrawal under 3 broad buckets or categories. The first one is essential needs. There is housing and special circumstances as well. So this has been clubbed into 3 buckets versus 13 provisions which were available in the previous provisions. The second is that more number of withdrawals are allowed. Basically, the frequency has been increased. You can withdraw 10 times for education, 5 5 times for marriage versus 3 times which was allowed earlier. The third is that partial withdrawals are now allowed immediately after 12 months of completion of your service. Earlier it was very particular to a particular reason. For instance, if you had to take out money for housing, you had to have 3 years in terms of opening of your account. For marriage, it was around 7 years. But now it's flat out 12 months for any reason that you pick. In fact, for special circumstances, you no longer need to specify a reason. There's freedom to withdraw without justification. So they say that earlier, special provisions would include something like an epidemic, national calamity, but now they need to specify what these special circumstances are. But they say 100% withdrawal of your eligible balance is allowed under the new provisions. What the street or the members have not liked, the fact that they've asked for 25% of your contribution as a minimum balance in the account all the times. This has drawn a lot of criticism from the members. Additionally, the premature final withdrawal window has been increased from previously 2 months to 12 months now. What it means is if you're unemployed, you will be able to get your full money back after 12 months, or you can apply for it only after 12 months. But do remember, there is a special clarification here, an important one, that 75% will be available after you terminate your employment or you become unemployed. But that 25%, the remaining amount, is only available after 12 months. So this is an important clarification. In terms of final pension as well, withdrawal window has been extended from 2 months to 36 months. So these are some of the important provisions which the EPFO has approved with respect to withdrawal. Some of them liked by the members, but some of them have been gaining a lot of criticism.
All right. Many thanks for joining us. The CEO of the Employees Provident Fund Organization has defended the tweaks in the fund's withdrawal rules. In an interview with CNBC-TV18, Ramesh Krishnamurthy said the 12-month lock-in rule for 25% of the PF balance would help ensure pension benefits in the long run. Take a look.
What was felt was that let us make it easy for people to access their own PF money in times of financial need, but at the same time protect their PF for their long-term social security requirements. As you are aware, India is a young country, but all the youth who are going to retire, who are now coming into the work, are going to retire in 2055, 2060. So unless and until we plan for proper social security protection in times of their retirement, then they'll have less of a corpus to be available. So that is why a concept of a minimum balance of 25% was visualized, and that has been kept away as a minimum lock-in balance. Rest of the 75% is freely accessible up to, so if 100% of that is accessible by the member, we have kept a separate category called special circumstance. In special circumstance, up to twice in a year, you can withdraw up to 100% of your eligible balance. So the 75% is always accessible to you. Now, what used to happen earlier was that you could have withdrawn only small amounts towards illness or something like that. For unemployment, you were forced to take a final settlement. So anything more than 2 months that was available as unemployment, you would have had to exit your PF membership. What was happening was that we were finding that people were exiting their full PF membership. Therefore, what was happening is that they would wipe their entire PF balance completely and they would rejoin after some time. So what was happening was that they were losing out on a very important component, which is called pensionable service.
And you can catch that exclusive conversation with the EPFO CEO at 6 p.m. this evening, only on CNBC-TV18. We'll head into a break, but up next with Diwali around the corner, global shortage of silver leaves jewelers in Delhi in a fix. A special report coming up. The festive season, silver in high demand as prices surge 20 to 25% in a month and premiums rise from 8,000 to 10,000 rupees per kg. Delhi-NCR jewelers report limited stock, forcing buyers to pay top rates. Shivani Bazar's reports from the nation's capital on the festive rush and the challenges buyers and jewelers face amidst the global supply crunch. Take a look.
It's the festive season, and while the sparkle of gold continues to attract buyers, it's silver that's stealing the headlines this year. not just for how much it's selling, but for how little of it is available in the global markets. A global supply squeeze has pushed up silver prices sharply and created a shortage that's now being felt on the ground, from refineries to retail counters. I am here in Delhi-NCR, where jewelers are saying that they are facing mounting pressures to keep up with both demand and cost. Silver prices have jumped nearly 20 to 25% in the past 1 month, as global demand outpaces supply. A surge in industrial use, from solar panels to electric vehicles, has deepened the supply crunch. The Silver Institute projects a global shortfall of over 140 million ounces this year. In India, jewelers are one of the largest consumers of silver, and they say they are finding it increasingly hard to replenish stock, with premiums rising up to 8,000 to 10,000 rupees per kilogram.
There is a lot of demand in the market, into retail, into wholesale, a lot of demand, huge demand. So the difference is, and supply is very less, you know. There's literally a scarcity from the miners and from all the places where they source it from. And there's huge demand in the market for jewelry, especially for the coins, gold bars. So I think that's why the premium is a lot right now. If a jeweler is holding up some particular stock, he will only sell his stock once he's getting it from the back. So it's not possible for him to sell something and which if can't refill it, so he won't sell it ahead.
As gold prices hovered near record high, many small investors and festive buyers have turned to silver. But with a sharp rise in prices and demand, jewelers say the metal, which was once seen as an affordable alternative, is slipping out of reach.
Right now the premiums from the actual rate is far more, there's no supply. So you're stuck in a situation where the rate is what it is. You want to pay for it,
It's not just festive demand that's driving the silver rush.
The main difference is the price cost. It has been jumped at least 70 to 80% on the silver article. So definitely the demand for the middle class people has been nil now. This is the only occasion they can think of buying something in a coin or maybe Lakshmi Ganesha to buy as an investment for their children or for the future. But this year they have facing a problem because the price has been increased a lot.
The craze is not just for physical silver. Silver ETFs have also seen strong inflows this quarter, and that has meant greater demand for the underlying asset. Analysts warn the imbalance could last through 2025 unless global mining output rises. So while the festive rush continues, it's clear that this season shine comes at a higher cost. With global supply lines stretched and prices on a boil, silver may remain the most sought after and hardest to get metal in 2025. In New Delhi with Vijay Akhilesh Singh, this is Shivani Bazaz for CNBC-TV18.
Well, Delhi's air quality index has entered the poor zone just a week ahead of Diwali. This has prompted authorities to impose stage 1 of the graded response action plan. The measures include the ban of non-essential construction, dust control and stricter vehicle checks. Meanwhile, the Supreme Court has allowed the bursting of crackers from the 18th to the 21st of October between 6 a.m. to 7 a.m. and 8 p.m. to 10 p.m. for the National Capital Region. Patrol teams will be deployed on ground to ensure that only certified crackers are sold at permitted locations. At least 20 people have died and 16 people are still critical after a bus caught fire in Rajasthan. The bus was travelling from Jaisalmer to Jodhpur yesterday. 19 people died on the spot. A 75-year-old man died during treatment. Initial investigations suggest that a short circuit in the bus air conditioning system triggered a gas leak. The fire broke out and trapped passengers inside as flames engulfed the front of the bus, blocking all exits. In international news, Hamas has handed over the bodies of 4 more Israeli hostages, bringing the number of released deceased captives to 8. Israel has said it will only allow half the agreed number of aid trucks into Gaza and has delayed the opening of the Rafah crossing. Meanwhile, US President Trump has called on Hamas to disarm, warning that if they don't disarm, the US will disarm them. It will happen quickly and perhaps violently. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a minute with more.